Emerging markets often face a unique set of challenges when it comes to the growth of financial technology. One of the primary issues is the lack of adequate infrastructure. In many developing countries, basic internet access is not widespread, and even when available, it might suffer from slow speeds and high costs. This makes it difficult for fintech companies to offer services that require stable and fast internet connections. Another significant problem is regulatory uncertainty. Many emerging markets lack clear and supportive regulatory frameworks for fintech, which creates a challenge for companies attempting to navigate legal complexities. Without clear guidelines or appropriate support from governments, fintech startups may find it difficult to grow or even sustain their operations. Additionally, high levels of financial illiteracy in the population can hinder growth. Many people in emerging markets are not familiar with digital financial services or the benefits they offer. This lack of awareness can lead to lower adoption rates and reluctance to engage with fintech. Trust is another key issue. In regions where banking and financial institutions have historically been unreliable, gaining consumer trust is a substantial hurdle. People may be skeptical of new financial solutions, fearing scams or loss of money. Economic instability in these markets can also pose a risk. High inflation rates, volatile currencies, and political uncertainties can create an unpredictable environment for financial technology companies. Such volatility makes it difficult to plan long-term investments and growth strategies. Lastly, competition with traditional financial services can be intense. Established banks and financial institutions may have more resources and brand recognition, making it challenging for new fintech companies to compete. They may also face resistance from these established entities, which can create barriers to entry and growth. Despite these challenges, fintech in emerging markets also has significant opportunities. With the right strategies, companies can leverage technology to address gaps in traditional financial services and drive financial inclusion. However, addressing infrastructure issues, building trust, enhancing financial literacy, and navigating regulatory landscapes will be crucial for sustainable growth in these markets. The financial technology (fintech) sector is rapidly evolving across the globe. While established markets like the United States and the United Kingdom continue to innovate, several emerging markets are showing significant promise and potential for fintech growth. Here are the top 10 emerging markets for fintech growth. 1. Brazil. With a large unbanked population and increasing smartphone penetration, Brazil offers immense opportunities for fintech solutions, particularly in digital payments and lending. Startups like Nubank are leading the way. 2. India. India's fintech ecosystem has surged ahead due to initiatives like the Unified Payments Interface, UPI. The country is witnessing exponential growth in digital transactions and has a vibrant startup scene. 3. Nigeria. Nigeria has one of Africa's fastest-growing fintech sectors. The government's push for financial inclusion is driving the rise of mobile payments and microlending startups. 4. Indonesia. Indonesia's large, tech-savvy young population and the push for financial inclusion make it a hotbed for fintech innovation. Peer-to-peer lending and mobile wallets are particularly thriving. 5. Mexico. Mexico's fintech sector is poised for growth thanks to regulatory support, a robust startup culture, and significant demand for financial services. The focus areas include remittances and alternative lending. 6. Vietnam. Vietnam is rapidly moving towards a cashless society with increased smartphone usage. Fintech startups are capitalizing on this shift, especially in digital payments and e-wallet services. 7. South Africa. Known for its advanced banking system, South Africa is seeing a surge in fintech startups targeting both the unbanked and underbanked populations, with services ranging from digital banking to blockchain solutions. 8. Philippines. The Philippines has a growing fintech landscape, supported by government regulation and an increasing number of digital consumers. Mobile payments and digital banking are expanding. 9. Kenya. Kenya's fintech scene is dominated by mobile money services like M-Pesa, leading to a wider adoption of other fintech innovations. The market is ripe for mobile banking and lending services. 10. Colombia. Colombia is fostering a fintech-friendly environment with proactive regulations and a burgeoning startup ecosystem. The main areas of growth include digital payments, lending, and personal finance management. These emerging markets are characterized by a combination of regulatory support, technological adoption, and a growing need for financial inclusion. As they continue to develop, they present significant opportunities for investors and entrepreneurs in the fintech space.